fractional reserve banking prior to 2020 was about keeping 10% of depositors' money within the banking system. And the rest of that money, the 90%, was to be relent out to people. And today, what we're the new regulation is telling us that we can lend out, the banks can lend out 100% of the money. And that could be kind of a scary thought. The Federal Reserve banking system within itself has a little above $2 billion of money to pay back any of the insurance that would be needed to make a bank or to make the customers whole again. That's the money that's being insured. With that being said, and we realize that the depositories being held within the banking system is over $9 trillion, that would mean that the FDIC does not have enough money already to be able to pay back the insurance if the banks went belly up. And that becomes a very scary scenario. And so we have to understand what's going on here, what's happening in the banking system. Well, number one, you've got China, Russia, India, South Africa, and Russia coming together, and they've created their own currency, which is the BRICS. Well, why is the BRICS being formed right now? Well, number one is because the U.S. looks like it's getting weakened completely with this debt crisis. It looks like if there was ever to be a move on the reserve currency, now's a great time to take advantage of that. And number three is that what people don't realize, because unless you're a banker, you won't understand these Basel IV requirements. And what that's basically saying is that, the banks must have, a portion of their assets or a portion of their balance sheets need to be backed by some sort of tangible assets. So it could be gold, silver, oil. It could be a number of different things, but it needs to be backed by some sort of an asset. And, so BRICS is coming in saying, hey, we're backed by gold, silver, and a little bit of oil, petrodollars. And we're saying, okay, well, that could be a great thing, right? Because now we don't have to worry about whether we're going belly up and is our spending like out of control, because it's no longer going to be challenged through this fiat currency. So if we understand the long picture of like what's changing within the systems, are the banks going to still be called banks? Maybe not. They may reprogram them into these financial service centers. And what does that do? Well, it changes them from banks to financial service centers. It does. Do they retain your gold, or do they retain your deposits? It depends. Do normal citizens have faith in the current banking system and whether the banks are going to be able to pay back their money? So now we go back to the earlier part of the conversation and say, well, look at all this impact. And now we're back to, hey, does the FDIC have enough money to cover our debt? They don't have enough money to cover all of our deposits. That's a big problem. And now if we're looking at the global sector and we're saying, hey, look, well, now we have another reserve currency brewing over here called the BRICS, and and other countries are beginning to think that the U.S. isn't strong enough and they may not be able to pay back their debt. I mean, is this going to be the era where we actually fall into bankruptcy? And do we usher in a new type of system? Well, then I have to go back to Jerome Powell and go, look, what is Jerome Powell doing? And what is he saying? Well, he's saying, look, we're going to put all of we're looking to this central digital currency. Why are they looking at that? Because they know that we're kind of in trouble. That's my guess, is that they're looking at this saying, look, we need to have a solution for this problem. This problem is getting out of hand. So it'd be interesting to see what happens. I would be very curious to see whether or not there becomes two competing systems, because you have the digital currency, but I also know that there's also a quantum financial system that's also in play. That means that you have two competing systems of currency within the system. One, which is backed by blockchain and has all of these, that means that, we can literally have a transparency in our ledger system of knowing exactly where the spending is and where the money's being lost. And there will no longer be this, where did our $2 trillion of black budget money go? and things of that type of conversations, we will know because all we have to do is look on the blockchain and say, hey, we can just follow the money. And I think that's what most citizens want today is they want transparency and understanding where's the money supply really headed. I mean, does it really make a lot of sense for us to be spending all this money into Ukraine today? I don't think it takes a lot of economists or even the central banking system or, unfortunately, Joe Biden at the State of the Union telling us that, hey, you know what? We've got inflation under control. We don't. We're not even close to having that under control if 2% is our benchmark. So that means that there's going to be a lot of people without jobs. Is there other alternatives other than just raising interest rates in order to help us? Well, that's for Congress and for fiscal policy to come together with monetary policy and see what Congress and the central banking system come up with. But I am pretty confident that what we're going to see is a digital currency system ushering its way through the doors. And that is going to be the solution to why the banks went belly up. We can look around the countries and we can already begin to see that many of the countries are facing, these little dilemmas. Well, it has to deal with currency. I mean, what's happened in, Ethiopia, there's a run on the banks. And the reason that there's a run on the banks is that the citizens are unable to pull out their withdrawals, and the banking system is saying, well, look, we put out these notices to tell you that the currencies were going to change. And so if we're beginning to see that citizens are unable to obtain their money, and then we see a repeat of that in China, and then we see a repeat of that in Europe, it's not too far-fetched to think that the United States is not, a part of this situation. They are very much in that mix, and we should be very concerned about what's going to happen if the U.S. goes belly up and FDIC doesn't have enough insurance fund to repay its customers. And I think, what message could I possibly do? What could I give to the public? And I say, well, I'm not going to be a person that's going to tell you to do anything, but I'll tell you what I will do. I'm going to first start withdrawing some of my money from the banking system already, meaning that I don't have any confidence in the banks. And I'm going to put that money behind some assets, just like the banks would, and that would be gold or silver or, petro or, and maybe even take some hedge positions elsewhere. But the truth is that I have no, if the central banking system isn't confident in their system and they need to usher in digital currency, then I would say, how confident can I be? And if FDIC doesn't have enough money, I'm wondering why we're not changing the policy back to there should be about 10% reserve. I mean, that's not even much considering a deposit, but that's something at least. So if you have 10% on hand within the banking system, at least you can lend out 90%. Why did we make this rule that says that, the fractional reserve banking must be changed to a 0% hold? It makes zero sense to me. So I think that's something to take into account. And if we take a look at the bigger picture, I think we can start to make sense out of, what's shifting, what's changing, why are we going to be concerned about this? We'll start looking and seeing what happens, and let's start to look down the road a little bit. And how do we position ourselves to look at this so that we're being prudent about our decisions within the banks?